Have you ever looked at a company's financial report and sort of wondered what's the real story behind those big profit numbers? What really lets a company more than double its earnings year over year? Well, today we're doing a deep dive into exactly that. We're looking at the Q1 2025 interim financial results of Asia Asset Finance PLC, AAF for short. They're one of Sri Lanka's fastest growing non-banking financial institutions.
That's right. A really interesting case study.
Our mission today is basically to sift through their report, the one for the period ending June 30th, 2025, and, pull out the key insights.
Mhm.
We want this depth dive to give you a clear picture of AAF's performance, their strategy, what these numbers actually mean for their future, and hopefully do it without getting too bogged down in heavy financial jargon.
Yeah, cut through the noise a bit.
Exactly. We want to show you how a company can really set the tone for a whole year of growth and, well, transformation. So, okay, let's unpack this right from the start. When you first glance at these headline figures, what immediately jumps out? What's the big story?
Well, diving into AAF's Q1, I think the thing that really grabs you is just the sheer scale of their profitability growth. We're talking about a profit before tax that's PBT of LKR 294 million.
Okay.
And that represents a 122% growth compared to the same quarter last year over year.
122%. Wow.
Yeah. I mean, this isn't just, a healthy increase. It's a massive leap, almost explosive, really. It signals something pretty significant is driving their success.
122% jump in PBT is
Yeah, that's explosive. And it's not just profits shooting up, right? Their assets grew quite a bit, too.
precisely. Their total assets increased by 12.8%,
Okay.
which brings the total value up to LKR 41.8 billion. So when you see that kind of asset growth combined with such a dramatic profit increase, it really paints a picture, doesn't it?
It does.
A company that's really hitting its stride, building a very strong foundation for future performance. Right. So beyond those big headline numbers, the report mentions specific key highlights for Q1 performance and financial position. For someone trying to, really get the essence of the company's health, what are the most important indicators to look at?
Yeah, good question. The next step is definitely to see how that top-line growth filters down into the details, the operational stuff. So, for instance, their profit before income tax and VAT, which kind of shows operational performance before some big tax hits that climbed to LKR 415.8 million.
Okay.
And that helped push their overall net profit for the period up to LKR 181.1 million. We also see their total comprehensive income, which is a slightly broader measure, rise to LKR 192.4 million.
So definite positive momentum across several key profit metrics there. What about value for shareholders and the core business itself? Is that expanding?
Absolutely. For shareholders, the net asset value per share, that's basically the book value of their slice of the company, it improved to LKR 31.96.
Right.
And their earnings per share, EPS, which tells you how much profit they make per share out there, that increased to LKR 1.46 as of June 30th, 2025. That's up quite a bit from LKR 0.93 the year before.
Significant jump.
It is. But maybe the most powerful sign of their operational expansion is the loan portfolio itself. It grew by LKR 3.58 billion.
Wow. In just one quarter.
In just the first quarter, yeah. Reaching a total of LKR 34.9 billion. This is a really strong indicator of major expansion in their main business lending.
That is a huge expansion in lending. Given, the economic climate can be tricky, how are they managing the stability side of things with such fast growth?
That's the crucial balance, isn't it? And here, their capital adequacy ratio, or CAR, really stands out. You can think of CAR as like their financial safety cushion. It measures capital against risk.
Right.
AAF maintained a really robust CAR of 24.07%.
That sounds high.
It is. It's well above the industry requirement. And it signals excellent financial resilience, a strong buffer against potential bumps in the road.
Okay, that's reassuring.
Definitely. And on top of that, their return on equity, ROE, how efficiently they use shareholder investments to make profit that improved nicely to 18.71% quarter-over-quarter. So taken together, these specific metrics give you a much clearer, more granular view of their financial health, their operational skill, and how they're actually turning that growth into real value.
Okay, this is where, for me, it gets really interesting because it's not just about the numbers on a page, is it? It's about the strategy behind them, the actual impact. How is AAF physically expanding its reach? What are they doing on the ground?
Yeah, connecting it to the bigger picture is key. AAF isn't just growing its balance sheet numbers. They're actively growing their physical footprint, too. They actually opened 4 new branches just during this first quarter,
Or in 3 months.
4 in 3 months.
Yeah.
It's a strategic move to strengthen their presence in important regions, and it obviously makes them much more accessible to customers.
So this sounds like it's not just growth for its own sake. It feels more aligned with maybe a broader mission. But does that kind of rapid expansion bring challenges?
Oh, absolutely it does. And yes, it directly ties into AAF's commitment to financial inclusion. That seems quite clear. It's about giving individuals, families, small businesses better access to credit, to investment products, right where they live and work. Now, challenges, sure. Expanding physically means more operational costs, integration hurdles, managing new teams. It's complex.
Right.
But the report itself frames it very positively. It says, this quarter has, and I'm quoting here, set the tone for another year of growth and transformation, and that the company is redefining its role in the financial services industry and solidifying its place as one of Sri Lanka's most dynamic and forward-looking institutions.
That's quite a statement.
It is. So for you listening, this isn't just some corporate growth story. It's really about how that growth potentially translates into real benefits, better financial access for communities.
Let's dig into the engine room then. The statement of profit or loss. What's really driving these profits? If we compare June 30th, 2025 to the same time last year, what specific lines really tell this story?
Okay, peeling back those layers on the income statement, it does show a fascinating operational picture. Their main revenue stream, interest income from loans, it surged by over 42%, up to LKR 1.83 billion.
Okay, solid growth there.
Very solid. But the real eye-opener, I think, is their net interest income. That's what's left after they pay their own funding costs. It practically doubled, jumped an incredible 99.45% to LKR 893.5 million.
Wow, almost doubled. How does that happen?
Well, it suggests either they're lending much more efficiently or they've managed to significantly improve their cost of funds, or likely a bit of both. It's a very powerful signal.
Okay, a near doubling of net interest income is.
Yeah, that's extraordinary. What about overall operational efficiency? And were there other big factors affecting the final profit number?
Well, their operating profit before VAT on financial services just exploded. It was up an astonishing 174.91%, reaching LKR 415.8 million.
Incredible efficiency gains, then. It looks like it. But, and this is important, you also have to look at the value-added tax on financial services. That also saw a huge increase, over 536%, up to LKR 121 million.
Ouch. That must have taken a bite out of the bottom line.
It definitely did. It really highlights how external factors, like tax policy changes, can significantly impact the final profit, even when operations are firing on all cylinders. But despite that big tax hit, the profit for the period still grew by a very healthy 56.52%, ending up at LKR 181.1 million.
Still strong growth, despite the tax impact.
Exactly. So understanding these income and expense drivers helps you see the underlying operational strength, but also how different things from core lending right down to taxes shape that final number.
Right. Now the balance sheet, that gives us a snapshot, doesn't it? What the company owns, what it owes at a specific point in time. What does AAF's balance sheet tell us about its overall health and how it's managing resources? Let's compare June 30th, 2025 to just 3 months earlier, March 31st.
Yes, a crucial check after seeing that profit surge is, well, how solid is the foundation? Is it sustainable? Looking at the balance sheet comparison, the total assets grew again by nearly 13% in just that quarter, reaching LKR 41.88 billion.
Okay.
And a big chunk of that is their financial assets at amortized cost, specifically the loans and advances. That's the core lending business we talked about. That line item grew by almost 12% in the quarter, up to LKR 32.59 billion. So healthy growth right at the heart of their operations.
And liquidity, how are they managing their debts and deposits?
Their cash and cash equivalents saw a pretty big jump, over 36%, up to LKR 4.29 billion. That suggests a strong liquid position, which is good. On the liability side, total liabilities increased by about 14%, reaching LKR 37.91 billion, which makes sense given the asset growth. Interestingly, though, the amount due to customers, which is mostly customer deposits, only increased modestly, just under 2%, to LKR 20.36 billion. Yeah. And maybe most importantly, total equity, the value belonging to shareholders, that grew by a solid 5.04% in the quarter. So this balance sheet view gives you that vital snapshot, what they own, what they owe, the value for shareholders. It provides key insights into their overall financial stability and that core lending growth.
Okay, let's shift focus slightly. How does AAF actually structure its business? What are the different parts? And maybe more critically, especially now, how are they managing the risks that come with being in the financial sector, particularly given the economic situation in Sri Lanka?
Right. This gives you insight into their strategy, both for making money and protecting themselves. AAF breaks down its operations into segments based on products and services, each with different risk-reward levels. These include finance lease, gold loan, other types of loans, investments, and some other activities.
And which ones are driving the business?
The report clearly points to their gold loan and loan segments as being significant revenue generators. So there's a definite focus there.
Okay. And risk management. What specific things are they doing, especially with the economy as it is?
They seem quite proactive. The report mentions several measures. There's a strong focus on asset-backed lending, lending against collateral, like gold.
Safer, generally.
Generally, yes. It provides more security. They also emphasize strict credit evaluation from the start to minimize the risk of defaults. And importantly, they're actively restructuring or rescheduling loans for customers who are stressed by market conditions. That helps the customer and protects AAF's portfolio too.
So, working with borrowers.
Exactly. Plus, there's securing extra financing to manage liquidity risk, making sure they have cash available, and keeping a tight rein on operational costs. So understanding these segments shows you where the money comes from, and seeing these risk strategies really highlights how they're trying to stay resilient in a challenging environment.
So, we've looked at performance, strategy, risk.
Right.
What about the owners, the shareholders? And how's the company perceived in the wider market? What does the report show about shareholder value?
Yeah, if we connect all this back to the market, the share price performance tells a pretty compelling story about investor confidence. If you compare Q1 2025 with Q1 2024, the highest price their shares traded at jumped from LKR 15.00 all the way up to LKR 41.50.
Huge increase.
Massive. And the lowest traded price more than doubled, from LKR 13.00 to LKR 25.00, the price it last traded at, up from LKR 13.50 to LKR 41.00.
So, big gains across the board. Strong market signal.
Very strong positive signal, yes.
And who are the main owners? Who holds the big stakes, and how are they funding some of this growth, like the gold loan expansion?
The report names Muthoot Finance Limited as the main ordinary shareholder. They hold nearly 73%, 72.92% to be exact.
Okay, dominant shareholder.
Very much so. Finco Holdings Private Limited is another key holder with just under 10%, 9.73%. So it's quite a concentrated ownership. And regarding funding, it's interesting the report specifically notes that LKR 2 billion raised from debentures like corporate bonds was fully used up.
Okay.
And it was used specifically to expand the gold loan business.
Directly fueling that key segment.
Precisely.
Mm.
So it shows not just investor confidence in the shares, but also how strategic funding is being channeled very deliberately into those high-growth, high-priority areas like gold loans.
So let's try and wrap this up. What does this all really mean for you, our listener? We've seen Asia Asset Finance PLC put up a really, truly remarkable first quarter in 2025. It's driven by huge profit growth, smart strategic expansion with those new branches bringing services closer to people, and also some pretty robust financial health indicators suggesting they're stable and resilient.
Yeah, I think AAF is clearly doing more than just growing numbers. It's actively solidifying its place as a dynamic, forward-thinking player. The growth feels less like just expansion and more like the result of careful strategic planning, commitment to their goals, and, as we discussed, that underlying mission of financial inclusion seems quite strong.
Right. So here's a final thought to leave you with. Considering everything we've unpacked about AAF's Q1, especially that powerful mix of strong lending growth and their commitment to making finance more accessible in communities, how might this blend of profitability and tangible social impacts start to redefine your own understanding of what a successful financial institution really looks like, particularly in emerging markets?